I think they would do it, Lawrence, if it turns out that what we had in the last CPI reading and the one that's coming up around the middle of October shows a worsening picture. Not only that the expectation itself would adjust immediately higher and set up the November meeting for potentially 100, but then a lot of the Fed members would then come out and say, okay, which is not yet on the right path of tightening. We need to do a lot more, and you're getting into more emerging market style tightening, because 100 basis points is quite common in Latin America and Eastern Europe, right? You see that there regularly. But even a Riksbank in Sweden did that just a few days ago, 100 basis points. So it's definitely something that could happen. I think we should just keep it in mind because we are dealing with inflation, as you noted. Energy prices are somewhat leveling out. Agricultural prices are leveling out too. The conflict in Ukraine may be escalating, given the headlines that we're seeing coming out of Putin, right? Who's threatening with more action and wants to annex these regions he's occupying really quickly. So it doesn't take much for energy prices to regain strength quick, and it completely changes the outlook on inflation rapidly. And to note there is that the New York Fed always puts out inflation expectations from consumers. Yes, they're declining, but the inflation uncertainty component that consumers cite is really elevated, really high. I think that plays in the Fed's mind too. They're really uncertain about where inflation will land. So we cannot exclude larger moves than 75 in the future, even though today looks to be likely 75.